Welcome everyone to Richardson Capital Management's Economic and Investment Update Review for February of 2021. My name is Mark Steele and I'm here today with my teammate Dan Brown, Director of Investment Management. February was a decent month. Stocks were broadly higher in February with small cap stocks continuing to lead the way. The number of infections of the coronavirus is trending lower as supply of the vaccine continues to increase, thanks in part to approval of a third vaccine from Johnson & Johnson. So the good news is at this level of production, most Americans should have at least one shot by June. So Dan, what other positive things did we see in the month of February?
Sure, Mark. We also saw a very positive conclusion to fourth quarter 2020 earnings season, and expectations at the start of earnings season were for a decline of 10% in earnings growth. But at the end of the earnings season, we actually saw positive 5% earnings growth. So again, that was a very positive factor throughout the month of February. Another factor that we're paying close attention to is just the overall interest rate environment. So we saw a little bit of volatility the last 2 weeks of the month as interest rates rose modestly. Overall, we still think the level of interest rates near this level is still very accommodative for stocks to move higher. We took a little bit more of an in-depth look at this topic, and we relied on one of our research providers, which is Strategas Research Partners, and they looked at the last 7 times that interest rates rose considerably from 1993 through 2018. And in all 7 of these time periods, stocks were broadly higher over that time period where interest rates rose. So we still think that the overall interest rate environment is still very accommodative for risk assets like stocks.
That's excellent. And so the other topic that's been in the news a lot lately is this next round of stimulus, which is going to total just under $2 trillion. Dan, can you give us an idea of how big this is, and should we be concerned about inflation?
Yeah, it's very big, Mark. So the graph that we're showing here is just scaling the last couple rounds of fiscal aid with the great financial crisis of 2008, 2009. And you can see here that when this $1.9 trillion is included, it's pretty massive, especially when you scale it as a percentage of GDP. And let's not forget that the Biden administration is talking about another fiscal aid package later in the year of about $1 trillion. So inflation is definitely a factor we're paying attention to. But overall, the financial conditions and the interest rate environment, we still think it's very favorable for stocks to move higher over the course of 2021.
That's good. That's good stuff. So stay tuned for more to come as we continue to do these updates on a monthly basis. Feel free to share these with friends and family if you find anybody that might find value in what the topics are or just want to share our story. So we look forward to seeing you next month.